I've been investing since I was just 13 years old, and I was paper trading with my dad and my brother. We used to sit at the table, pick out companies that we want to buy trades in, buy shares in, and then revisit what the prices were a month or so later. Fast forward now, where I have multiple portfolios, multiple investments, high risk and low risk, I'm here to share some tips. Investing can be a confusing and intimidating process for beginners, but it doesn't have to be like that. With a little knowledge and some careful planning, you can start building wealth for the future. Here are some tips for investing as a beginner. Tip number 1 is to start by setting financial goals. Ask yourself, what do you want to achieve with investments? Do you want to save for a specific event? Do you want to save for a wedding, for example? Do you want to save for a retirement? Or is your goal just to generally build wealth over time? Knowing these goals and writing these down will help you determine how much you're going to invest and over what period of time. It will also help you figure out what investments are going to be right for you, which ones are going to align with your goals. For example, if you're wanting to save for retirement and invest over time, then investing in high risk assets such as cryptocurrencies probably isn't going to be the right route to go down. The second tip is to develop a budget, create a budget and stick to it. Before you start investing, it's important to have a clear idea of your financial situation. This includes understanding your income flow, how much money you've got coming in and how much money you've got coming out each month. By developing a budget, you'll be able to figure out how much you can afford to invest while still meeting your other financial obligations. You don't want to start investing and then suddenly not have enough money for your mortgage, for your rent or for your car. That defeats the whole purpose. It's important that you can still meet your financial obligations whilst investing. Number 3 is to educate yourself on the different types of investments. There are a variety of options when it comes to investing. You've got stocks, you've got bonds, and you've got funds. Each type of investment comes with its own potential rewards and with its own risks. So it's important to familiarize yourself with each investment and the risks that they hold. These are the simple basics, so these are very important to understand before you make that first investment. Number 4 is a big one. Number 4 is to diversify your portfolio. I'll repeat that again, diversify your portfolio. This is crucial to control your risk. Diversifying your portfolio is a way that investors control their risk within the holdings. So you're not putting all of your eggs in one basket. If one type of investment goes down, the other might go up. If you're putting all of your funds, all of your money, all of your savings into one type of investment and it does bad, then that's it. If you're spreading your funds and your resources between different types of investments, if one goes down, it's not going to have such a significant impact. If one investment does poorly, you might have an investment that does really well. The downside to this is if you've got an investment that does really well, it's not got as much money in as it would have done if you put all of your eggs in that basket. You can manage your risk by diversifying different assets. If you're young and you're wanting a more high risk portfolio, you might have something like 10 to 20 to 30% in crypto. If you're someone who's saving for retirement and you want a relatively low risk portfolio, you're going to have more funds and less high risk assets such as crypto. Number 5 is to consider working with a financial advisor. If you're new to investing and it's coming across quite overwhelming, then do consider getting support. A financial advisor could be a valuable resource, especially if you're investing with loads and loads of money. They can help you understand the options and create a customized portfolio. They can help you create a customized plan that aligns with your goals and with your objectives. Now, personally, I wouldn't use a financial advisor because if you do those first 4 steps and you diversify your portfolio, you familiarize yourself with the types of investments and you set yourself financial goals and stick to a budget, you're doing pretty much what a financial advisor would advise you to do anyway. Now, just to be clear, this is not financial advice, I'm just a guy on YouTube. Number 6 is to keep an eye on your investment. This is less true when it comes with long-term plans like pension plans and things like that, and more relevant for high-risk assets and high-risk investments. It's important to regularly review your investments to make sure they are still aligned with your goals and with your objectives. Your financial goals and your objectives and even your budget might change over time, so it's important to regularly review and reassess your position and your portfolio. You might find that an investment is underperforming and therefore you want to exit your position and put it into something else. You might find that your risk preference is changing. You might settle down and have a family and want to be saving for a children's future, and therefore you want to reduce your risk of your portfolio and take away assets such as crypto, which are higher risk, and put funds into things like funds or bonds, which are lower risk. It's important to reassess your situation and reassess your portfolio as your situation changes. If you know that you've got a huge payment to pay out in the next 2 to 3 years, maybe it's for a college fund, maybe it's for a wedding, then you should be reassessing your portfolio. What you don't want to do is be forced to withdraw out of positions, out of your portfolio at a low point in the market. Investing can be a powerful tool to reach your financial goals and to build wealth over time. With these tips, you'll be on the right track to take control of your financial future. Best of luck. Give me a like and subscribe if you learned something new, and I'll see you in the next one.